When I look back on myself as a trader, I think back to 1986 when I first started trading the markets. I had my first brokerage account then. I was only 21 and I knew enough to be dangerous. So after going through my first market crash, which was 1987, and subsequently my first and only margin call, which ended up as a negative account balance, I realized watching TV and following the loudest guy in the room wasn't the way to pick stocks. Since then, I've curated a number of trading systems that relate to seasonal strategies, volatility strategies, contrarian strategies, and trend strategies. Today, I want to talk about trending strategies and how I look at and how I start trend. Number one question: what is a trend to those of you that are brand new to this? Well, according to Investopedia, trend analysis is a technique used in technical analysis that attempts to predict future stock price movements based on recently observed trend data. Trend analysis uses historical data, such as price movements and trading volume, to forecast long-term directions of the markets. But what indicators are used to predict trend? There are far more indicators than I can count, and they all do have some sort of price prediction based on volume and price. So once you find something that works for you, you're going to want to decide how much data you need to determine how far back you want to look for your potential indicator. Finally, you want to also determine if the indicator has any pattern of profitability, because isn't that what we're all here for? So let's start with something basic that I use: averages. An average is basically a group of numbers divided by the number of numbers in that group. Okay, sounds a little more complicated than it is, so let me give you an example. Let's look at Adobe. Let's say Adobe closed at one day, 490, day two, 496, day three, it jumps to 500, day four, 504, and day five, 510. That is 5 days, 5 closing days of data for Adobe. So to calculate the 5-day average, you simply add all those numbers up and divide by 5. On the screen here, you can see 490 plus 496 plus 500 plus 504 plus 510 equals 2,500 points. You divide that by 5 and you have the $500 average, the 5-day moving average. Now, to make this moving average, once again, we're just using 5 days of data, but to make it a true moving average, you're going to use the most recent 5 days every single day. That'll make a smoothed 5-day moving average for this or any stock. So, what moving averages do I actually use? Well, first of all, I want to get to this. Do I use moving averages in my stocks and ETFs? Yes, I do, but I use more than one moving average. I like to use something called the MA cross. The MA cross, or moving average cross, is created when you have 2 or more moving averages in different days on the same stock chart. So the short-term moving average is going to be more reactive, and in the long term, and as the markets gyrate up and down, these two lines will cross. Let's take a look at a very popular moving average crossover. This is the 50 and 200-day moving average, widely discussed on financial networks. The 50-day crosses above the 200-day. They call that the golden cross, and that is a bullish indicator. Likewise, if the 50-day crosses below the 200-day moving average to the downside, this is referred to as the death cross, and it's bearish. Now, I think this moving average crossover is great. I've got no problems with it except for one. The one problem I have is that it is suited more for investors and traders. The reason why is because it uses such large data certs that it's very slow to cross. And it may take months or sometimes years before you see a crossover occur on a stock that you're familiar with. Now, I'm a trader, so I need a shorter term cross. The values I like to use are the 10 and 30-day simple moving averages. That's why I call this the 10-30 crossover strategy, and it works like this. I am bullish whenever a 10-day simple moving average crosses above a 30-day simple moving average, and I am bearish whenever a 10-day simple moving average crosses below a 30-day simple moving average. Now, let's go back to a chart of Adobe. Since we're talking about Adobe, check this out. The chart you see here has the 10 and 30 simple moving averages added to it. Now, notice when the purple line crosses above the blue line, that's a bullish move. And when the purple line crosses below the blue, that's a bearish move. In an uptrend, such as what we're seeing with Adobe, You could simply take the bullish signals only and then go to cash when you get a bearish signal. But how do you know something's actually going up or down with a moving average crossover? How does it work in the real market? Well, the answer to this question really requires you to become a rules-based trader. A rules-based trader is not only one who could spot a pattern like this, but be able to back test that pattern as well using data and determining whether that pattern needs additional filters, maybe some refinement. And then finally, after refining and even back testing more, now you're ready to apply real money to the strategy. Next week, I'm going to discuss how to backtest this strategy and how to apply some rules to it to filter out unwanted trades. But before I go, let me give you my top 5 crossovers for this month. Number 1, Fastenal. This is a lumber and construction company, and it is just recently crossed. Stocks closed recently, also just below $60 a share. Arthur Gallagher's number 2, a $236 stock that recently had a crossover. Diamondback Energy is in the crude petroleum industry. They had a crossover that occurred just above 169. Old Dominion and Freight comes in at number 4, a $416 stock in the trucking industry, just had a crossover. And to file out the final 5, Williams Brothers, Williams Companies, $35.99, a gas production and distillery. I want you to take a look at these one more time. You've got 1, 2, 3, 4 of these are in commodities, all right, commodity-based and or commodity service industries. Only Arthur Gallagher sets itself aside from the pack. Now, a couple things I want to mention before we leave. Number 1, there's a little bit more on these 5 stocks than just the 1030 crossover. Number 2, I haven't even started talking about options yet. But we'll get into more of that next week. See you then.